Vaibhav. In today's session of Visual JForex, I will be explaining to you the use of indicator named TDI, that is Tom DeMark indicator. This is an oscillator developed by the Tom DeMark, and it has been fairly popular, and it's more or less like RSI. Of course, there is some difference, but the basic use of this indicator is like the oscillator, where we try to use this indicator for determining the trend as well as the strength of the trend. So this is the TDI indicator. It is classified under the other other indicators, and we will now head to the Visual JForex board developed by the Dukascopy Bank SA. You will find this indicator listed amongst other indicators just below the parabolic SAR extension, which we saw in the prior session how to use that indicator. Now today it's the turn of the TDI. This is the indicator block, which we will see how it can be customized to design and develop the algorithmic setup, which will help us in finding the profitable trading opportunities. For today's session, we'll be using the on candle as our start point. I have also included the formula for the indicator. Here you can see that this indicator is derived from the use of SMA and the difference between the highest value and the lowest value. So this is the formula in details. We will not really go into the details of the formula, so I will leave it to you to figure it out for how that calculation is done. We will more focus on the use of these for the automated setup. Okay, here is the TDI indicator. Now this is the default setup. We are using the TDI on the 14 time period of 1 hour each. Here the chart is of Euro USD, and I haven't done any customization. This is the standard setup. Now if we look at the input parameters which need to be defined for the indicator, we have to consider these four input parameters. First is the default instrument. Whichever instrument you want to work with, the instrument of your choice can be chosen here from this drag down list. We have the list of all these supported instruments for which you can design and develop the algorithmic setup using this platform. If you want to change it, for example, let us take the GBP USD as our instrument of choice for today's session. Then comes the question of the time period for the each candlestick of the instrument. Now, depending on your trading requirement, if you are trading on the lower time horizon, then preferable it is to use the lower time frames like 5 minutes, 10 minutes, 15 minutes, or maybe half an hour. So we have all the options here provided to us to choose the time period for the each candle, starting from 10 seconds and all the way to the month. For example, if you want to work with the 15 minutes, we can do that. We can change it. And coming to the shift parameter, shift is the look back period. Whether you want to use the current candles TDI value, or you want to go back in time and you want to retrieve the prior data, then all you have to do is choose the appropriate shift value, and the data for that period will be retrieved. And one important parameter is the total number of periods which will be used to calculate this indicator value. Now, first thing is the defining of each candlestick's time period, that is of 15 minutes. Now, when we take 14 here, this value, that means last 14 candles of GBP USD of 15 minutes each will be used to calculate the TDI, Tom DeMark indicator. Here we can change this also. The option is always up to us. I will also explain to you how the changes in input parameters want to cast an impact on the output for the indicator. So depending on the combination of the input parameters, we get three output mainly: the line, the low risk parameter, and the high risk. Now I will explain to you how this system works on the chart. So let us change this to GBP USD of 15 minutes each. This is now the chart of GBP USD of 15 minutes each. It's taking a bit time to load the data. Okay. So here we have now the GBP USD chart for 15 minutes, and in the bottom we have this TDI indicator plotted for last 14 candlesticks of 15 minutes each. Now this upper line is called, the yellow line is called the low risk line, which is defined at 0.7, and the lower line, the pink one, is called high risk. The basic functionality of this indicator is that whenever we see that the output line has crossed above the low risk zone, that means the underlying instrument's volatility is now likely to subside. It has risen to great extent, and it might turn the corner, and this is the time to think about the possibility of trend reversal and get involved on the opposite side of the trend. So basically it gives you an idea of the oversold and overbought kind of scenarios also. Whenever the line is trading above the low risk zone, that means the underlying instrument has entered into an overbought territory and the trend reversal is possible. When the line is below the high risk zone, that means the underlying instrument is now in the oversold scenario, and here the volatility has been high, but it is likely that this volatility will also subside and we will see the reversal happening from the lower side. So this indicator, as I said earlier also, is more like an RSI, but bit different in how this is calculated. But the functionality, how it is used, is pretty similar to the RSI. And when we see that the TDI values are falling, it can be indicative of the fact that the underlying instrument is now in the sell-off mode, that is, the bears are in control. And when we see that the TDI values are rising, that means the underlying instrument is in the bullish zone. One way to look at it is to use this crossover. Whenever the line crosses below the low risk zone after having been above it for a considerable amount of time, we can see it as the confirmation of the trend reversal and initiate the new short sell trade. And vice versa for the buy trade, whenever we see that the line is now crossing above the high risk line after having been below it for a considerable amount of time, that means the consolidation on the lower side is also now coming to an end, and we are seeing fresh buying momentum, which is likely to push the prices higher. So it's time to get involved for the buy trade. So we can utilize this indicator as per various possibilities, and we have to see how best to utilize this combination. For that, you will have to do some observation and permutation combination, and also after you are convinced that certain setup is likely to prove profitable, you should also do a lot of testing on the historical data using the historical tester. So you will have the better understanding of how the indicator works and how likely it is to generate the profitable trades, and that way you can find an algorithm, design and develop an algorithm which will bring you profit even when you are sleeping. So that's how this system can be taken advantage of, and it's always up to us to figure out the possible combination. As I said, we can always change these parameters. Suppose if you want to work with the different time horizon, then all you have to do is change one of the parameters. Now when I change the 15 minutes to 4 hourly, the trading opportunities will also change, and the trades will be for a lot longer time horizon, and the trade signals will also be generated lot less, as we will need more time for the confirmation of any particular signal. And as I said, the setup holds true on the lower time frames as well as on the longer time horizon. So here you can initiate the sell trade whenever the crossover happens below this low risk line, and you can initiate the buy trade whenever the crossover happens above this high risk line for the buy side. So we have these opportunities, these probabilities given to us, and all we have to do is figure out what is the combination which will be of the best use for us. So this is how we can define this indicator block, and then for us it will be generating these output values which can be utilized to figure out the combination. And also we have to be mindful of these settings. How we are going to customize these also has an impact. Whether we are using the bid side or the ask side, we will have minor difference between the output value, and we have to be careful to make sure that if we are doing the comparison between the output values of two different TDI indicators, we have to make sure that they are on the same side, either on the bid or on the ask side. Applied price also goes on to have a lot of impact. Which applied price is being used as the input for the calculation of these output parameters is going to long way impacting how these values will be generated. So because of that, we have to be particularly mindful of these parameter also, and we can customize these options. The input price for calculation of this indicator, it can be close price, open price, high price, low price, median price, or the typical price. So we have all the options provided to us. Now I think I should also explain to you how the impact will be there when we change this applied price. So let's edit this, calculate from the custom data. I think on the Visual JForex platform that option is there, but on the JForex platform we don't really have the customization option. So that is one of the benefit of Visual JForex platform. What you can't do on the manual setup, you can do on the algorithmic setup. So it also makes the setup more efficient when it is automated. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Don't subscribe to, don't forget to subscribe to our channel, and stay tuned for the further developments in the market. Thank you all for joining in. Goodbye.